The biggest mistake many wealthy families make isn't about how much they've accumulated, it's about exactly what they do next. True financial success isn't just hard work. It's applying the right strategy at the right stage of your wealth journey. So, whether you're on the first rung with up to $1 million, building momentum at $5 million, scaling at 20, or managing over $100 million, the wrong decisions at the wrong time can unknowingly cost you millions. Now, over the past 20 years, I've worked with wealthy families across Asia, the Middle East, and Africa to navigate these decisions. What I've learned is that your net worth, the total of all your different accounts and assets minus your liabilities, is only half the story. How you structure, manage, and think about wealth determines whether it truly serves your life and your legacy. So today, we're going to explore the wealth ladder, what people get wrong at each stage, and actionable steps to protect, grow, and enjoy your wealth whilst avoiding all the different blind spots that trap many, many families. By the end, you'll see why great financial life management isn't just about the money. It's about wise behavior, sage decision-making, clarity of thought, discipline, and structure. Before we climb the wealth ladder, let's dispel a myth. Investing wisely isn't essential at every level. Done well, investing wisely accelerates your journey to financial freedom. Done poorly, it can really hold you back. Whilst decades of research provides a very solid framework, most traditional banks and advisors or brokers still follow highly outdated and often self-serving, conflicted approaches. Now, technology and analytics, computers have largely solved the mechanics of investing. It's commoditized. A spider's web analysis, for example, can easily score a portfolio out of 5, highlighting the positives, the negatives, and the overall balance. The rounder the wheel, the more efficient the portfolio. These types of reports can also detail costs, cash drag, diversification, and future expected returns. So fiduciaries such as AES can use this to calculate the drift from the most optimized pathway or financial trajectory and the compounded opportunity cost of suboptimal investments or portfolios over an entire lifetime. The real value of being guided by fiduciaries or trusted guides when optimizing your financial life isn't in picking stocks at all. Computers and software can do this much better than any human. It comes from detailed planning, wealth structuring, and wise counsel around sensible decision-making. Here's an example from the private banking arm of one of the world's local banks. Here you'll see a score of 3 out of 5, and a wheel that I definitely wouldn't wish on my own car. The result? An expected performance drift of 4.24% per year from the much more balanced portfolio that I use for my own family fortress, shown next to it right here. This difference between accepting the best of what a private bank can offer to its clients and using technology to independently search the entire market for the best available option is truly profound. Often, many millions and millions when compounded over the many decades in front of us. But many investors are just simply unaware of how to get these independent second opinions on what they are holding or the life-changing cost of holding on to suboptimal, inefficient portfolios, of inaction, of maintaining the status quo, of prevarication. So, what are the other big things that successful families must be aware of at every stage of the wealth ladder? And by the way, if you're a high net worth individual wondering if you're getting it right when it comes to your investing, download our free guide in the description below. The 10 principles inside will help you take advantage of the opportunities provided by efficient capital markets and provide a systematic, time-proven way to reach your financial goals. So, Here's what most people get wrong up to the $1 million level. They think building wealth is just about accumulating more money. But the biggest mistakes early on are often overspending and big ticket items and failing to explore multiple different income streams. It's very easy to get caught up in lifestyle upgrades instead of wise investing opportunities that will generate income that compounds over time. I've seen clients with $1 million who were ready to spend their money on luxury cars and holidays, only to realize later that their cash flow wasn't going to keep up with their ambitions. A more productive approach is to keep buying into income-producing assets that outpace inflation. The mindset to embrace here is simple. Focus on continuous learning, disciplined, systematic investment, and increasing your income. Don't just save, actively grow your wealth and keep expanding your options. Over time, this foundation allows you to climb the wealth ladder with true confidence. Moving up from 1 million to 5 million, the landscape changes. At this level, what got you here won't get you there. Many people remain invested in the strategies that help them build their first million. But growth now requires a much sharper focus on opportunities like institutional grade investments and equity upside, for example, partnership at work. The risks here are chasing speculative investments or potentially sinking a lot of your capital into a main residence without analyzing in detail the most efficient way to structure this. Success at about $5 million is about balancing continued wise, systematic investment with the smart deployment of capital. Accepting your current level may be a strategic choice, or you might pursue ventures with a meaningful upside. The mental shift is recognizing that disciplined decision-making, careful selection of growth opportunities are absolutely essential for moving on to the next stage. Once you reach 20 million, you face an entirely different set of challenges. Many believe their success makes them untouchable, but concentrated business holdings, overlooked personal liabilities, and even family dynamics can derail the plan. Clients at this level often wrestle with whether to sell a business, start a new one, or stop actively climbing the wealth ladder altogether to focus purely on wealth enjoyment. Opportunities include scaling an existing business, selling ventures, or investing strategically into different growth sectors, but the stakes are higher. Mistakes can increase stress, strain trust, and shift family relationships. Here, paranoia is a tool for protection, not fear, but healthy vigilance. Only those who carefully monitor risks, diversify holdings, and anticipate potential pitfalls are able to safeguard their wealth whilst continuing to grow it. After navigating the $20 million stage, the next level is a different game altogether, $100 million and beyond. I've worked with many extremely wealthy families where the family members aren't at all living their ideal life. They're not happy. So here, the biggest mistakes are assuming that money solves everything and overlooking the importance of non-financial priorities like relationships, friendships, and health. Protecting what you've built and structuring your life around these priorities becomes just as important as protecting your capital. Opportunities now include creating a meaningful impact and leaving a multi-generational legacy. Philanthropy, founding institutions, supporting the next generation and beyond, or funding transformative projects that you enjoy become central. Risks, however, are also significant. Divorce, lawsuits, shifting motivations, and undue risk-taking can all erode wealth and family well-being faster than markets ever can. I've worked with clients in this bracket who, despite their wealth, recognize their quality of life hinged on how they managed their personal relationships, their purpose, and their health. By balancing these types of priorities with disciplined stewardship of their wealth, they protected all the different types of capital they had and amplified their impact. At this stage, your influence is defined by what you do with your resources, not just what you hold. So let's recap. Low wealth families often hold cash, vehicles, and a primary residence, which may cost more than they actually earn. They're therefore being eroded by inflation. Higher wealth families hold retirement accounts, investment portfolios, real estate and private businesses, increasingly income-producing assets growing faster than inflation. Whether you're at 1, 5, 20 or 100 million and beyond, the number itself is only half the story. Here's how to focus your efforts and decisions at each stage of the wealth ladder. 1 million. Invest wisely. Learn and develop good income streams. 5 million. Balance spending with sage, systematic investment and business career opportunities. 20 million. Protect against blind spots, stresses and concentration risk. 100 million and beyond. Manage complexity wisely. Prioritize relationships, purpose, and health. The solution at every stage is clarity, knowing your objectives, understanding your risks, and structuring your wealth for the long term. Tools like the Spider's Web analysis provide an objective, independent insight into exactly what you have and what you're likely to get in the future. True wealth and a rich life isn't about a number. It's about confidence. It's about your ideal self. It's about structure and alignment. Ensuring your financial capital wisely supports your life today and the legacy you wish to leave behind. If you found this helpful, please subscribe and make sure you watch my next video on the 4 retirement myths high net worth individuals need to ignore.